Hi you guys, what if I told you you could get all the stocks you need to be completely diversified for your whole portfolio in one fund? Would you be interested? Talking about it next, Firefighters Financial Toolbox. Hey you guys, welcome back to the channel. My name is Brad. This is the Firefighters Financial Toolbox. If you're new to the channel, hit that subscribe button and join the community. We talk about finances, taxes, and retirement. Today we're going to talk about how we could get all the stocks we need to be fully diversified worldwide in one fund. Part of investing that makes things hard is deciding what you need. I'm a big believer, for most people, index funds or ETFs that follow indexes are the easiest way to get diversified. They're low cost, which is very important in the long run, and they're simple. And I believe the simpler you make investing, the easier it is for you to stick to a plan and have a good outcome long term. So, what if I told you for one fund, you could have worldwide diversification in over 8,400 companies. Fund we're going to talk about is VTWAX, the Vanguard Total World Stock Index Admiral shares. Now, it's got a nice low expense ratio of 0.10%, or that means you're paying $10 on $10,000. Now, this fund does have a $3,000 minimum to buy in for an initial investment. So you do have to save a few pennies to get that $3,000 investment. Now, why would it be better to have the index fund versus the ETF? And we're going to talk about both of them. So for index funds, if you're somebody who's dollar cost averaging, somebody who's putting in, let's say, $500 a month all year long so that you can get max out your Roth, then an index fund is easier for you. You know, if you buy an ETF, you have to buy that share at the share price of it today. Now, let's quickly talk about that. VT is the ticker symbol for the Vanguard Total Stock World Index ETF. It's exactly the same fund, you guys. Exactly the same fund as the index fund, only it's an ETF. Now, the ETF has an expense ratio of 0.09%. With ETFs, you do have to buy at that share price, and currently it's got a share price of about $83 per share. So remember, that's going to change day to day, and when you buy it, you're going to buy it at that share price. So if you're dollar cost averaging, this can make it a little bit harder because you're not going to have round numbers like you would if you did it in the index fund. Let's take a look at the makeup of this fund. So we look at the region allocations. We see that the biggest chunk, or about over 58%, is North America, you guys. So that's the United States and Canada, maybe a little bit from Mexico. You have about 10.2% in emerging markets, about 18.5% is in European stocks, and a little over 12.5% is in Pacific Rim countries. And then you've got about 0.4% that's made up by the Middle East and some others. But let's take a look at the 10 largest holdings. Apple, Microsoft, Google, Amazon, Facebook, Berkshire Hathaway, JP Morgan, Johnson & Johnson, Alibaba, and Visa. Now, those top 10 holdings make up about 11.5% of the fund. And if you see, only one of those companies is not inside the United States, being Alibaba. But if we take a look at the makeup, you see the number of stocks in this fund is 8,423 currently. So with one fund, I have over 8,400 companies to diversify me. Now, people are going to ask, why do I need international stocks? The United States is doing way better than the international stocks are right now. And they're right, you guys. The main reason to own international stocks is to minimize the chance of an unfavorable portfolio outcome, i.e. losing all our money. Index fund investors say, I don't know which individual stock or bond will perform best, so I just own them all. A lot of people ask, how much should I have in international? I don't know. Well, that's a good question. If we look at what Vanguard says, Vanguard says, although there is no right answer for all investors, empirical and practical considerations suggest a reasonable starting allocation to non-U.S. stocks of 20%, with an upper limit based on global market capitalization. If we look at our graph, we see that currently the global market capitalization of international stocks is about 51–52%. So right now, the average investor has about 79–80% in U.S. stocks and only 20% or so in international stocks. What's the right answer? That's an individual question. This is an easy way, though, to buy one single fund or one single ETF for a low cost and get all you need for stocks worldwide. Complete worldwide diversification, one fund. Investing should be easy. The easier it is, the more prone you are to stick to your plan. Everybody should have a plan on their investing journey. Whatever your plan is, make it, stay with it, regardless of what happens in the market. Hope you guys got something out of this. If you did, give me a thumbs up. If you're new to the channel, as I said, please subscribe. It's really helping me out. And we'll see you again. Thanks.